Hey, I'm Jason, and this is Supply and Demand Daily, where I tell you what we learned about the economy today. So today we're going to talk about some data points that came out. We had producer prices, which was another extremely high month, extremely out of the ordinary high month of increase. Producer prices are the prices that the producers and manufacturers of goods and services have to pay for the inputs, the components that it takes to bring those services and goods to us, the end users. And then I'm going to go into, on a more positive note, what the job market is looking like in the form of initial jobless claims, which are still historically low. And I'm going to show a chart that shows just how historically low they are. So let's get right into it. There's three different flavors of producer prices that we're going to look at. The first of those is base commodities. Now, when you think base commodities, think of things like oil. Think of things like the pork bellies that get turned into bacon after Tyson cures and smokes them. We're also thinking about things like wheat, about things like corn that get turned into both Oreos and ethanol, and also get turned into the sugar that goes into most of the refined food products that most of the people in the world are enjoying at some point during the day. Talking there about high fructose corn syrup. So what are the base commodities doing? Well, in April, they went up by a full 2%, which doesn't sound like much, but most people like to explain inflation or think about inflation on an annual basis. So if you take that 2% and you multiply it by 12, you actually get 24% in one short year. And that was down a little bit from March, where the rate of increase from month to month was 2.7%. And just for a little bit of perspective, I've given the calculation between what this rate of increase has been since January of 2020. So essentially what this is telling you, we've got a 33% increase, and that means that now for the producers and manufacturers who use a lot of these base commodities, it is now 33% more expensive just to acquire the inputs in order to make the stuff that comes out on the end of their conveyor belts, in a manner of speaking. So 33% increase, that's pretty high. Again, that's over a period of 2 years and 4 months. So these costs filter down to the consumer, obviously. But let's go one step down the production chain. Down the production chain is closer and closer to the end user, you and I buying our bread at the grocery store. Let's go one step down the chain into finished goods. And this is what it would take, say, a producer of light bulbs to assemble the components or buy the components of the light bulbs and then package them up, make them, package them up, and then ship them to the consumer. And we saw a 0.8% increase in those numbers in April, which was down from 2.1% in March. That's just on a month-to-month basis. Since before the beginning of the pandemic, so January 2020, this figure has increased 20%. So it is now 20% more expensive for the manufacturers, the producers of finished goods. So we're talking about light bulbs, t-shirts, microphones, all that kind of stuff. It's now 20% more expensive for them to procure the items and assemble them. And we're not even talking about labor here. We're just talking about the hard inputs that go into those goods. Now, let's look at the same thing, but let's take out the prices of food and energy goods. So that means no gasoline, and that means no bread, no Oreos, no peanut butter, none of that stuff. Just looking at the finished goods like hats, again, apparel, chairs, desks, all these different kinds of things. That went up by a full 1% in April of this year, and that was actually up from a 0.7% increase in March. And ever since January of 2020, it is now 12% more expensive for the makers of these goods to get the parts into the factories in order to put them together, in order to assemble them. So it's pretty large there. That's 6% per year, which is a very large increase. And now, to make this note just a little more positive, let's talk about the labor market or the job market. Oh yeah, and this is a 5-year running chart of producer prices. For base commodities, they've gone up 38% in 5 years. For finished goods, including food and energy, 26% in 5 years. And for core finished goods, that's without food and energy, it's gone up 17% in 5 years. But the job market is still looking pretty strong. This is a chart of the 4-week moving average of unemployment claims, which are recorded and reported by the state governments because they administer unemployment benefits. So this is showing you the 4-week average of that from late 2017. And what I'm pointing out here is that in November of 2019, which, to give a little bit of context, the pundits and economists at that time were saying during that time that the job market was as strong as it had been in a 50-year history. So the job market was very generally strong in November of 2019, and that's why I'm showing that number for comparison. So the 4-week average number of unemployment claims across the nation during that time was about 225,000. And now, in May of 2022, after all of the craziness that we saw in this figure and in the job market in the last couple of years, because governors shut down their state economies, issued stay-at-home orders, things like that, put a lot of people out of work. Now that number is sitting around 192,000, which is a significant improvement, obviously, over where we were 2 years ago, but it's even better than what the job market was doing in November of 2019, which is, again, when it was considered the strongest in a 50-year history. And that's all I have for you today. If you want to know more about these types of indicators, about these types of statistics, I'm going to be doing a slightly longer video, 15 to 20 minutes, where I'm going to explain producer prices, and then another one where I talk about a couple of different indicators for the job market. So if you're interested, come back and see me this weekend on YouTube. I will be posting those on YouTube and Instagram. I'd like to thank you very much for joining the Supply and Demand Daily, and I hope you have a pleasant day. I'll be back tomorrow. Thanks.